Hello, it is Friday the 16th of February. We're going to look at crypto ahead of the weekend. What a week it has been for Bitcoin. It really has been amazing and all driven by ETF inflows. This week, the markets in Asia, China have been closed for the Chinese Lunar New Year. They open again on Sunday night, so we should see some really interesting moves on the Sunday night open. We could also see a little bit of thin liquidity because Monday is a holiday in North America. For the US and Canada, it's President's Day. And so I think the focus next, at least for the Monday open, will be on markets in Asia. So let's talk about the Bitcoin inflows, which have been massive this week. In fact, let's find it here. In the last 2 weeks, the price of Bitcoin has gone up 21%, which is massive. And it's all driven by these huge inflows into Bitcoin ETFs. For example, the inflows into the BlackRock ETF have been 6 billion, whereas the outflows from, which is double basically what the outflows have been from the GBTC ETF, and the inflows have doubled in the last 3 days. By comparison, when the gold GLD ETF was launched, it took 2 years for it to reach that landmark and double. So it's really, you can't underestimate, the buying power. And when you think, if the markets are buying 6 times more Bitcoin than is mined in a day, and it doesn't look like any of the miners are selling their Bitcoin that they're mining at the moment, they're all kind of banking it, then it's a real supply and demand thing. Until that stops, it's going to keep going up. Now, because there aren't that many fundamentals for Bitcoin, well, apart from the halving, of course, if price is going to keep going up and it looks like such a sure winner, then people are going to keep buying the ETFs. I also don't think this is going to stop anytime soon, because if you're a financial advisor in the United States and a new product or a new ETF comes to market, it usually takes about 3 months, I'm told, until you get permission to add it and sell it to clients. So most financial advisors at the moment aren't even able to offer their clients this Bitcoin ETF yet. So I don't think the demand is going to end any time soon. Another question I got was, is there likely to be a pullback pre-halving? Because we've seen pullbacks pre-halving before. And I have to say, if this demand from the ETF continues, probably not. I think the effect of the halving may be a little bit muted, or we may have to wait for it. Now, in simple terms, I think from the November low, we had a very nice 5 waves up, followed by a 3-wave correction. So what we're looking for next here, between the low that we made in September and where we are now, is the next 5-wave sequence before we get a bigger correction. So the key here for me is how you count it. If from this low we say this is 1, 2, 3, 4 and we're in wave 5, potentially this wave 5 could finish, if we were to close this week or this month, for example, back underneath this 61.8 level, which is at 50,000. That's where, if I measure from this low to high, project it from the bottom of this correction, that's where the 1.618 level is. And I think if we can continue above that, obviously we go to 56,000. But for me, really the next upside level is going to be where this swing is 2.618 of the first swing. And that comes in for me at 65,600. So holding above 50,000, say, it might be bumpy, but we're going to keep going to 65,000. Now, if I add in the fib retrace levels from the high in November to the low here in November, so 2021 to 2022, you can see that around here is also this 61.8 fib level, which sometimes can be messy. We reversed perfectly at this 50%, but we held the 38.2. So if here's the 50%, if it's like a ladder, you know, it was pretty volatile. Sorry, we reversed at the 61.8, but we held above this 50%. So for me, that means we're climbing the ladder, we're still going up. So now, if we were to, over this holiday weekend or this month, see a little bit of a pullback, I'm going to say that the most likely support is going to be 50,000, and I would only look for a bigger correction back underneath 48,500. And so 48,500 when we started this week was where I was looking for it to be support. It was where we pulled back and tested it on Tuesday, and since then we have kept going. So I'm going to keep this and say bearish underneath 48,550 for a bigger correction. I'm not saying a bigger market top, just a correction. And in terms of trend levels, 50,000 is really a really good on any pullback level to keep going. Now, if we look at this most recent swing that we've done since the 23rd of January, I think we've done wave 1, 2, and we're in a wave 3, and we should see a pullback and a fifth wave. Again, so on the lower time frames, I'm going to measure the relationship between this move and this correction. Just let me see how this looks there. 3-wave correction. So 5 waves up, 3-wave correction. And you can see here that this 50,000 level is also the 50,500. So this is our trend support. And again, 56,000, 55,800 is our next upside target as long as we hold above it. So we're a little bit in the middle here, and we are consolidating a little bit sideways. But you know, for me, there's no damage to this trend. This is about as bullish a correction as you want to see, really. You know, when you don't give back any price, but instead you just trade sideways in time. Could it turn into a bigger pullback? Yes, it could. And we're going to apply the same old rules here. Look, on the hourly, this previous swing low, which is here at 51,200, as long as that holds a support, and our 4-hour 20 moving average, or basically our sideways range here on the hourly, holds, we're still going up. If we break underneath it, we're likely to see a bigger pullback to 50,000. And 50,000 is where our key trend support is. Underneath it, we're not going to be bearish unless we close underneath 48,550, but that's the second level that we look to pull back to. So still bullish consolidation and a really nice uptrend. But remember, if the biggest driver of us going higher is ETF inflows, and if you look at where most of them come from, most of the move comes just before the open, and there are going to be no ETF inflows on Monday to lift us higher, are they? Because they are all closed because of a holiday. So if we were going to plan for when we're going to have like a little bit of a bigger correction and a wave 4, it is likely to be this Monday because of the markets being closed. And then we'll see if people jump in to buy the dip Tuesday. So that's where I am looking for in Bitcoin. Let's take a look at ETH. Today has been a little bit of a pullback day after a really strong week and continuing to push higher in ETH. We look at it on our weekly. We had key resistance at 25,000. We have broken above it. We're closing at a new high. Next upside target is 3,000, but there are no ETH ETFs to worry about. But just like Bitcoin, when we look back to the low that we made on the Wednesday, the 24th of January, this is a daily chart. It looks like we've got 1, 2, and we should see a wave 4 and another pullback before we continue higher. And again, this previous swing should be the most that we really pull back to. We wouldn't want to see it much more than that. And as long as we hold there, we're still going up. And back underneath 2,500 again, for me, would be more bearish for ETH. But ideally, I'd like to see 2,600 hold. Now, are we likely to do that bigger pullback? If I look at the hourly here, as long as we hold underneath these hourly moving averages, yeah, potentially we could. This is where our hourly 200 moving average is. So And also, if we look at kind of this sideways consolidation, we have broken down a little bit in ETH. And ETH underperforming or making a bigger correction usually points to alts doing the same. Okay, so I got 6 altcoin requests today. They are Rune, Pyth, Floki, Sol, Stacks, and let's take a look then at these. Let's start with Rune. We'll go to the weekly and look at where we are with Rune, take everything off. Had a really nice rally, 5 waves I think, or it looks like 5 waves anyway off the lows, but I actually think that I'm not convinced that we've done our 5th wave. And when we look at where we are, let's look at this most recent swing lower in Rune, and you can see this was from a 50%, and now if we go the other way, we have done our 50% back. So we're doing that thing with correcting markets where 50% becomes really, mean reverting markets tend to keep mean reversing. So keep doing that 50% pullback pattern until we break out of it. So if we do the same thing going the other way, it looks like we went a little bit beyond it. But actually, if we don't close this week above this 50% number, so here's our 50%. If we pull back and we close here, then we've done just 50%, and we are likely at this point to do a 50% pullback and keep doing it as we coil up. So this 5.525 level becomes really important for me here when I look at where this key support is for Rune, and that's also this swing high. So Sunday night closing underneath 5.525 means we are likely to do a bigger 50% retrace. If we hold above it, happy days, we're still going higher. And if we look at it in terms of fib terms from this high to low, that kind of works with the fibs as well, doesn't it? This is a 61.8 fib, this fib 50% we're looking for is on the middle. If we close underneath it, we're likely to come back to this swing low and the 38.2. And remember, it is a little bit of a holiday weekend, but we could see some really nice moves in Asian trading. So key support on a pullback, this is a bearish reversal candle today. Key support is at 5.525 and then 5.1 or 5.0 in Rune. Let's now, if we can hold above this 50% level, for me, I do think we should see another leg higher, but it's not quite clear to me yet that we've done 5 waves up and 3 waves back and we're ready to go again. But holding that 5.25 level would be a really good sign for the next leg higher. And then I kind of think I would look for this bigger swing. So from this bigger high and this bigger 50% level, which would take us up to these swing highs in 11. That's kind of where I would be looking for next if we start a new upswing. Okay, let's take a look at PY Python. So, which I'm not sure. Whenever I see a pattern, I looked at a few charts and I looked through a few of them. I'm ignoring this big spike because on some exchanges that went much higher. Instead, I'm looking at these swings from the lows, and here it looks to me like we've done a textbook kind of 3-wave move. And when you measure from a 3-wave move, low to high, if you hold above the 61.8, you're looking for the equal measured move level next, which is at 0.72. So I'm going to say we are, obviously, as we head into the weekend, seeing a little bit of a pullback, and 0.52 for me becomes key support. Now, if we go down to the daily, you can see we have started here with our Heikinashi. On the daily, we have started a little bit of a pullback. So these previous highs, this previous high here, and the daily 20 moving average is where I would be looking for. I would also, put on this, see if it lines up, go from the low, lines up with the 236 fib, and it lines up exactly with this 236 fib as well. So 0.528 for 4 reasons really, is the ideal pullback level in PythUSD. It's previous support and resistance. It's a back test of this measured move, 61.8 level. It's a 236 retrace from the lows, and it's also going to be the daily 20 moving average. So That's where I'm looking for. Now, if it goes up ahead of then, it has to really prove itself to me. At the moment, if we look back here, these 4-hour moving averages, particularly this 4-hour 50 moving average, has been really good support, hasn't it? And this is exactly where we are. So we could see a bounce from here. And because most good corrections here, look, everyone has been really nice 3 waves. Look, 1, 2, 3, 1, 2, 3. I would expect the same here. So if it bounced from here, I have to say I'm not sure I would buy it. I would more likely like to see a higher low, then I might buy it, or I might have a go. Now, if we get underneath these moving averages, what we quite often see is underneath and then, you know, something like this. But this for me would be the ideal level, 0.58 on a pullback. Not saying though, you know, look, how many times in crypto do we see double tops, retests of the highs, double bottoms? So I wouldn't be surprised if we bounced here, and I'd be looking for a higher low and then that. So PYTH, not quite the buy that I'm looking for yet, but a very nice uptrend, and a good pullback would be very interesting. Let's take a look at Floki. This is another, like, these alts are making such bullish patterns. When we look from the low in September, we've got very nice 5 waves up. Key question here then, is this 3 waves back, the correction over, and we're on our way up again? I really do like how we are shaping up with these daily moving averages back above them. But quite often here it takes a bit of time to make a base like we did here. And the previous highs and lows, if we look at this bottom, they're always a bit of trouble to get above before you get going again. Just like here, and then boom. And so we're doing the same thing here. These previous highs and lows, highs, are a little bit of trouble. It would be even trickier. Let's see if there's a fib level here. It's actually a little bit higher. Look at that, 38.2. Fib level 3533. And until we kind of break above that, potentially we're in a little bit of a sideways range. And we could argue, so it's actually there a little bit lower, sorry, 3460. We could argue then that we're just making a little bit of 3-wave move, or making a base, something like that. Now, lower time frames, which you can see this level, we are just having a little bit of a pause here. I have to say that I still like it because of the bigger picture patterns, but as we head into the weekend, potentially this move could be done. Where would I look back to? I have to say this back test of this 236 fib for me would be first place that I'd be looking for, 31.53, and potentially we go a little bit lower, but back towards these daily moving averages, and a higher low would be my favorite long scenario. So I don't think, look at this daily, you know, we need to kind of reset and make a higher low for our long entry in Floki. But yeah, this bigger picture pattern is very bullish. 5 waves up, 3 waves back, exactly kind of what you look for. Now, if we make another swing higher here in Floki, where would our targets be? Well, first off, I would measure the first swing, put it at the bottom of our 3-way correction, and say my first target would be a retest of this swing high from December then at 46.49. The equal measured move is 5,881, and hopefully this next swing would be a nice bullish 1.618 of the first one, and that takes us to 78.75. So looking good in that respect. And you know, this weekly high Kanashi says potentially if we can make a new high here, we're going up again. So I do like this very much. That's what I'd be looking for. There's one more thing I would check, and that is, so look at fib patterns for retraces. So if we look here from this high to this low, we reversed to the 786. When you do that and you close underneath the 61.8, your first target is the 38.2, which we've tagged. So we've done it. And so if we do that from the all-time high to lows, here in the middle, look, 34.62, this level that we are trying to break above is this 50% of all-time high to lows, kind of a little bit of a pivot level they can turn into. So above 34.62, should see next swing higher to retest these highs and then hopefully new highs for Floki. But we could see a little bit of a pullback just because it's an important level. Next one we're going to look at is Solana. A lot of all these altcoins are making the same pattern with these corrections. For Solana, I have to say that this one is a little bit clearer for me. So again, if we go from this high to this low, this is sideways at a messy 38.2. And if we were to see a bigger three-wave correction, we would come back to these previous swing lows and 69.22, which is the back test of this 236 fib level. Also, if we were to look for having done, if this whole swing then from this low is complete, we would be looking for a bigger three-wave correction. And if we just, if we just even measure from this first swing here, from this high to low, and project it from where we are now, you can see that that brings us back to these previous highs and lows at 69.22. So how would we know if we're going to come back here or keep going higher? I think that this 107 underneath 107 again makes it a little bit likely that we're going to do that bigger pullback, or we could do it more easily. Like, let's look at it on the daily here. So when we're not sure if we're going up again, the last thing we want to see is a three-wave equal measured move look correction here. If we measure here, then in Solana, it's not quite equal measured move. I don't like it that it's back underneath this 61.8 level though. Another way to look at it is to put my measure from here. We're right on this kind of 236 fib from this low deciding level, isn't it? So I have to say, yeah, underneath here, that potentially we could see a bigger pullback. Now, sometimes I could be wrong. We could just make a higher low. Doesn't necessarily need to be the end of the world. We'll just come back 61.8 and keep going higher. But there is a little bit of a risk, that we get underneath here and we end up doing that bigger three-wave correction thing down to 69. So yeah, I wouldn't want back underneath this daily 20 moving average. I do think there is a risk of a bigger move lower in Solana. So I would be cautious with my longs at the moment. Let's take a look at stacks. Now, from the low that we made in, this is a weekly chart of stacks, from the low that we made in November 2022, we made a very nice three-wave rally here. Big, because it's a wave one, we did a really big, really deep three-wave correction. So 1, 2, 3, and here we are on our way up again. So I've measured from this low to this high, projected it from the bottom of this three-wave correction, and we are blasting. Now, normally, if we don't pause at the 1.618, which was here at 2.2, I normally think we're going to get to the 2.618, which is up here at 3.3. But this 2 level is a little bit of a fib number. So it is possible. It is possible also that this is a 786 fib. It is possible that we have done 1, 2, 3, 4, 5, and we could see a bit of a bigger correction here. And because this is also a 786 fib in stacks at 2.6, that's measured from this high to this low. Let me put that from this high to this low. This is the 786 fib. So the fib rules say that if you reverse to the 786 fib and you close underneath the 61.8, you're going to come back down to the 38.2, which is down here. So there isn't really a short trade setup here, and that would also be 1, 2, 3, 4, 5 back to the bottom of this wave 4. So we could potentially pull back here before we do another leg higher. So we need to be a little bit careful. So key support is going to be that round number 2.088 ideally. Underneath 2.088, we are going to see a bigger pullback. So say we got underneath this level, if it became resistance, and we would our short trade would be between 2.08 and 1.36. As long as we hold above here, we're still in an uptrend. But again, as we head into the weekend, we're getting quite a long tail here, and when we've done that previously, we've seen a little bit of a nasty bigger pullback. So we're having a little pause. A bullish scenario here would be just a wave forward, just like this wave 2, which took what, 5 days. So if we were to not pull back very hard, just trade sideways in a correction and then break above this level, obviously we're still going up, then we would look for the 886 next, and then of course our measured move target is the retest of the highs. So we would look for this 2.9, and then 3.25 would be our next upside target. So really bullish, not a bearish reversal yet, but not a great place to buy without a little bit of a pullback. And look how stretched we are. Look how far away we are from this daily 20 moving average as well. So that's how I'm seeing stacks lining up. And yeah, definitely a close above 2.6. We should retest the highs. Okay, next one we're going to look at is ARK. When I look at this one, I actually think this is pretty bullish too. What I like about this, so from the low, which was in October 2023, if this was our first swing and a 3-wave deep pullback, then we did a really strong wave 3 pullback, and then I think this looks pretty good for 5 waves up and 3 waves back. But very often in a wave 1 you see quite a deep retrace. So I'm going to do my fibs from this low to this high. And I know I say this a lot, when you bounce from a 786 fib, if you close above the 61.8, which we keep testing, haven't been able to get above it this year yet, but we've tested it a few times, a close back above 0.962 then gives us a target here at the 38.2, next at 1.3, and I actually think if I measure this, we actually go higher to this 236 fib. So your first target is 1.3 and then 1.5, and I would actually have that higher one. And the reason I would have that higher one is because if I measure from this low to high, project it from here, it lines up. That's where this move would be 1.618 of this first one. So it all depends on us getting us above this 0.96 level. And we could also kind of apply these rules the other way. So we could say fib levels from this high to this low. Here we are sideways at this 236 fib level. If we get above it, we're likely to see more upside. And so you can see it's a little bit of a tough level. I kind of like, though, how these daily moving averages are, how they're 20 years back above the 50. They tend to pull apart. So yeah, I am looking for this to have a go, which is not quite clear we're there yet. So that's what I want to see in ARK. And if we can't do it, then I'm afraid we're in a little bit of a sideways range. And the problem with these sideways ranges, if this is just a correction, then it's going to be like this is 1, 2, 3, and then we're going to go 1, 2, 3, and then we get, So, yeah, important support and resistance then for ARK. And I would actually say, so weird how these round numbers, especially in crypto, this round number 1. So if we were to be conservative with what we kind of need to get above, a false breakout would be to this round number 1. And if we put that level on, we can see that it has indeed been really important support and resistance. It was resistance here, then resistance here. And so that round number 1, and when we got above it here, it was support. So that I really do think is going to be key for more upside in ARK. Above that round number 1, 1.528 next, and then hopefully 2, which would be our equal measured move target next. And then if we're going to do a really strong, obviously wave 3, 1.618 comes in at 2.98, which is basically 3. So above 1, we should get a 2 or maybe 3. that's ARK then. Good luck. Have a good weekend. Take it easy. Don't expect much ETF inflow Monday, remember, because of the US holiday, but looking for some moves in Asian trading.